You had me until the secular growth names, Jeremy. Usually those are who do you like in that group that you wouldn't consider in a dangerous part of the market?
You know, I mean, I really like stable, recurring, high growth revenue stories. Just the way I invest in things. And companies like Visa, MasterCard, PayPal, these kinds of names in the payment space. I mean, inflation is running because of demand being hot. And demand being hot means we're paying for more things. And Visa, MasterCard, and PayPal are going to benefit from that. So in that space, I mean, I think that there's just a very long tail of growth within those companies that's going to suggest that, you know, they were decimated last year as a buy now, pay later started to come on board and people started to switch and potentially move to other names that were growing a little faster. I think that's going to be largely a 2021 story. I think 2022 is going to show that these companies are resilient and growing very fast. And I think that they're going to still be opportunistic even in a higher inflation environment.
Yeah, it looks like you also like PayPal in that group. Also, you like the towers and the data centers. So basically, we often say that investors pay up for growth when GDP growth is scarce. Would you say that's kind of what you're doing here, or you're just focusing on really solid companies that could do well in what might be a challenging year for the markets?
Much more the latter. I mean, my thought is you own companies that can grow in either scenario, right? Is that higher growth, higher GDP? Yes, some of the other companies may work a little faster. But at the end of the day, these companies are secular growth profiles, is that they're going to grow. I mean, the demand for data and the demand for tower as we get more mobile and we move about and we're not working from the office as much anymore. I mean, those things are just going to grow regardless of what we talk about with regard to the economy in the shorter, medium term. So that's where we would like to focus, is that especially as attention gets taken away from these companies and they start to retrench a little, that's where the opportunity lies in saying, I can own this thing for 2, 3, and 4 years and still make money on the other side of this, even if the economy does different than what we expect going forward.
You know, Jeremy, I want to go back to the Visa, MasterCard thing because they're certainly good businesses, but I think they suffered last year because they were not sexy. And there were lots of others that were sexier. Is this year going to be a year where those stocks do become sexy, or is it going to be a year where those other stocks lose some of that allure, and therefore it puts Master and Visa in a better light?
Yeah, that is a phenomenal analogy there. I would say that absolutely. These are relatively boring, right? At the end of the day, they're not going to dramatically accelerate or decelerate based upon what's happening. So overall, I think, yeah, people kind of got bored of these names, but that provides the opportunity. Is the ones that people get bored of and start selling when they're chasing other things is where we see it as opportunistic, because one, you're paying cheaper multiples than you were in the past for these things. And two, I think people are just missing or at least concentrating on other elements of the story. You know, a lot of Visa and MasterCard is focused on cross-currency, cross-border, which is absolutely important to their company. But still, at the end of the day, people are swiping more and more and more and more. And when the U.S. consumer has jobs and growing, these companies are just going to benefit from it. And I think attention will be refocused on that going forward in this year.
Yeah, it's funny. I now use my phone. I'm probably the last human being alive who's now found out that you can use your phone to pay for things. But that's all running through some payment, whether it's Amex or Visa or MasterCard. It's all running through them. And I don't use cash practically at all. Jeremy, thanks.
Shepard Smith here. Thanks for watching CNBC on YouTube.